Markets are down big time today. We are a few minutes away from closing. The Nasdaq is down almost 3.5%. The S&P is down 2.3%. A big sea of red. Oh, but wait, got some green around here. There's actually more green than people would expect. As we said in previous videos, the stocks that drive the market up, like the Magnificent Seven, are going to bring the market down. Look at these stocks, these big ones today. Google reported down 5%, Meta down 5%, Apple down 3%, Microsoft 3.5%, Nvidia 6.24%, Broadcom 6.3%, Qualcomm, AMD. One lone gainer here, Cisco, that thong, right there, up 1.5%. Look at all of these other green here. It's not a ton, but it's more green than you'd expect for a day with this much red going on. We also have Chipotle reporting in just a few minutes. We will talk about that in this video. They're expected to earn 31 cents per share and report $2.94 billion in revenue. So we'll see what they actually report. They're down about 1.5% today. Guys, such a sea of red. Down 3.71% on the Nasdaq right now, down 2.4% on S&P. We've got about 3.5 minutes to go. This is a lot. Now, volatility is up big time. Why? Uncertainty. The VIX, the volatility index, the fear index is up a lot because of so much downward pressure on stocks. Guys, let's go look at the big runners of the market. Nvidia. Nvidia had an all-time high of 140 just a few weeks ago. It's at 114. Tesla reported yesterday it has been a free fall, down $30, 12% right now. Let me change the color on this thing. Down 12%. Even though they beat on revenue, they missed on earnings. 52 cents versus 62 cents expected, and the market's beating them up, and I'm sure a lot of this is driven by stocks falling. Now, if you're new to the channel and you like hearing reports on the market when things are good or bad, and you want a little bit of reassurance when things are bad, subscribe here. Subscribe to our channel. I'm here to teach a process. I'm not here to hand out what stock you're going to buy. In fact, any stock that I own, you should not buy it just because somebody owns it. Even if the process makes sense to you, you need to make sure it's the right thing for you. But I'm here to teach that process so that you sleep better at night. Imagine how you would feel if you sat there and looked forward to days like this. And guess what, guys? The people in our community love days like this. We all love big red days. Why? The things we love got cheaper. Now, the next step is, are they cheap enough? That's the question you need to ask yourself. And for right now, this is a step in the right direction. Remember, a lot of investors feel that rate cuts are happening soon. I think they're factoring in like a 98% chance of a rate cut in September. Maybe. I have no idea. I'm not here to guess what's going to happen in the future in the short run. What I'm here to do is sit there and determine if a company I love is selling at the right price using fundamentals. And also, for those of you out there who are saving for retirement, dollar cost average and a low cost ETFs, no matter what the market does. Just be happy that if you're doing that and you waited till tomorrow, you got a discount on shares that you would have loved anyhow. That's the big key here. That's what's important. There are a lot of great companies out there in the market. If it goes through a bear market, will punish most all of them. That's just the fact. When people start selling, they start selling their ETFs, and then what happens? The ETFs are forced to sell the stocks within them, and it comes to build on itself. That's why we see such nosebleed valuations, all-time high valuations, except for 1928. That should be an indicator to people that the next 5 or 10 years probably won't be as rosy as the last 5 or 10 years. And that's okay, because when things aren't good and you're buying still, you can buy at cheaper prices. And when finally the market does explode again, which it will someday, to the upside, you'll be ready with a lot of cheap shares. And that's what I'm trying to promote here. Ulta hit a 52-week low today. I post on my Twitter at @EMPaulG. Follow me there if you want recaps as well. I engage a lot of people. I like to talk about everything having to do with economic stuff, stock stuff, life stuff. It's great. But I posted here today my Google and Ulta stock analyzer tools because I own Ulta. I don't own Google yet. Ulta, I have a very small position. I'm going to build a bigger position. Ulta was well over $500 a share not too long ago. Let me show you the last time. It was recently at $574 back on March 14th. That is a mere 4 months ago. It was at $574 per share. It is now at $369, down 5% today. I think it's the top quality company. that I hope gets cheaper and cheaper. Yes, it's in retail, but it has very low debt relative to its retail. They generate cash flow. They buy back shares at an intelligent price. I like the process here. They don't pay a useless dividend. Instead, they properly capital allocate. So check that out on my Twitter machine. So guys, a lot of red today. As these companies go further and further down, what's key for me is, are the fundamentals the same? Now, that doesn't mean they're making more money, because if a recession hits, you better believe a lot of these companies are going to take a hit to profit. But that's not the point. The point is, when the recession finally ends, they're going to see an explosion. And are you able to buy good prices, goods companies at good prices? That's what's key. That's what's really important. That's the process I want you to have. And I repeat these over and over. Just like Steph Curry starts every basketball practice session with 3-foot shots and then goes back to 5 feet and works his way back to the 3-point line today. He still works on the basics when he starts out. It's most important for you guys to stick to the basics and stick to what's simple. Find great companies at good prices. I look at Ulta and I see a company that has been able to still grow same-store sales during tough retail times. That's important to me. And they're not just growing just to grow, it seems. They're growing strategically and intelligently. They're putting their stores in Target to expand to more female market audience. I love that so much. They're not just going out there and getting an Ulta store to just have an Ulta store. And it's a nice store. It's clean. It's organized. Women love going there. What else would I want? Just to let you know, today in the market was the worst day since 2022. We've had such a run of such a great time in the market going up, and a lot of people made a lot of great money. And if you did, that's awesome. That is great. Embrace that. But don't be afraid that if stocks fall, to pull the trigger and buy more great companies at great prices. That's what I want you to focus on. Don't think the market. Remember one thing, I heard this recently and I thought it was brilliant. If the market crashes, let's say 60%, why should you buy? Well, if you're worried about the world going to zero and the stock market going to zero, one, it won't happen. So you might as well buy at those prices. And two, if it does happen, your money's useless anyway. It's not going to matter anyhow. So you might as well buy. Just keep doing it, because if the markets go to zero, the stock market goes to zero, what's your money going to be worth? It's not going to be worth anything anyhow. So you might as well use that money to buy stocks at really cheap prices. Every past down market looks like an opportunity. Every future one looks like a risk, but you know how I feel about that. Let's see if Chipotle has any activity after hours right now. It's up about 1.26% after hours. Let me see if they've reported. Chipotle just reported. See right here, up over 10% right now. They reported 34 cents versus the 31 cent estimate. $3 billion in revenue versus 2.94. $3 billion in revenue. How does that compare to the same quarter last year? The quarter ending June, 2.5 billion. So 3 billion versus 2.5 billion equals a 20% increase in revenue. That's a big increase in revenue, guys. Am I right on that math? I am right on that math. Guys, Chipotle crushed it. 31 cents per share. Last June, they did 25 cents a share. So again, a 20% increase. Now they're only up 8%. This is what happens. Minutes after the report, huge up, huge down, huge up. And then there's a consolidation. And then before you know it, you get to they usually have some sort of announcement that happens. And they decide, okay, this is where the future of the company is going. They make some announcement. People love it or people hate it. So there's going to be a lot of volatility immediately when it happens. Let's see how it shakes out. But guys, Chipotle, I've said this before. I'll say it again. Their biggest issue to me is portion sizes. I've been saying that for years. A lot of people have been saying that for years. Recently, there's been a lot of scrutiny of that. And we're going to do our own little tests here soon on that, and release it to YouTube. I love Chipotle. I eat it as much as I can several times a week. It used to be once or twice a day. I have gone 3 times in one day, many times in my life. I've been eating Chipotle since 2006, 2005. I absolutely love Chipotle. It'll never get old. Now, I will say the one closest to my house, terrible service. I'm not going to say which one that is, but awful service. Forget about it. I'll be standing there waiting to be served, and they're talking in the back, laughing, giggling with each other on their phones while I'm sitting there. I have not taken my order yet. But that's not for anybody to worry about. Chipotle, that's for you to worry about because you're still able to make a lot of money. But when was the last time you stayed in a long line at Chipotle? Not because people are going there less, because of how great their online sales are going. Absolutely crushing it there. So here is the press release. Guys, 18.2% increase in revenue. Comparable restaurant sales increased 11%. That's huge. I'm sure a lot of that had to do with inflation. But guys, that's a huge increase in same-store comparable sales. Operating margin was 19.7, an increase from 17.2. Operating margin was 28.9%, an increase of 140 basis points, which is 1.4%. Earnings per share of 33 cents a share, a 32% increase from 25%. Oh my God. Opened 52 new company-operated stores with 46 locations, including a Chipotle and one international licensed restaurant. I mean, guys, this is incredible. They just did the stock split. This company's on fire. I mean, this is incredible news. And of course, for this channel, come to us. Yes, we like looking at earnings releases, but we don't make our investing decisions because a company misses or beats estimates on a given quarter. What we care is finding good companies who can operate at all times very well, even during bad times. For 2024, Chipotle is anticipating the following: full year comparable restaurant sales growth in the mid to high single digit range. That's the same store sales. That's great. 285 to 315 new restaurant openings, with over 80% having a Chipotle, and full tax rate between 25 and 27%. Guys, if you like this information, subscribe to the channel. You're going to love it. Have a good day.